AI agent companies and tools out there have cracked the code on how to take a probabilistic outcome and make it deterministic. What they do is they create like a workflow structure for the AI that allows you to get to 100% accuracy on tasks. Does that by taking your prompt, your request, and turning it into a checklist of measurable outcomes. It breaks it down into a series of tasks, and then it can tell reliably if it completed the tasks or not.
All right, welcome to another episode of the Modern CPA Success Show. I am Tom Waddleton. I am a virtual CFO with Anders, VCFO. My usual co-host is here, Adam Hale. Adam, welcome.
Hey, Tom. Hi, Blake.
Adam runs our VCFO division for us, and we have a great guest today, Blake Oliver. Blake is founder and CEO of Earmark and also has a background in accounting, tech, and marketing. Blake, welcome to our show today.
Hey, thanks for having me. Great to talk to you, Tom and Adam.
Yeah, we're excited about it. And just, can you give our listeners a little bit more of an introduction? Kind of what's your career background and what got you to where you are right now in this show and also CEO of Earmark?
Well, I'm a CPA, but I started out as a musician. I was a cello performance major in college, and I graduated into the Great Recession and figured out that I did not want to earn a living as a professional musician. I was working in LA and then moved to Florida, and I was driving around doing weddings, making not enough money to pay for the gas to get to the events. And I was working for a tutoring company also at that time. I've always been kind of good at standardized tests, so I was helping kids, prep for the SAT, that sort of thing. And it was a seasonal business, and one day in the middle of our busy season, the bookkeeper just quit. And I talked my way into his job because it seemed like it paid well and you could do it every week, and I didn't have to deal with the kids anymore. And so that's how I learned QuickBooks. And I read the manual in my spare time, and I realized, we were only using it for a fraction of its capabilities. We were just basically printing checks. It was a check register for us, but it could do so much more. And so I helped that business really make use of all of the features, and that's how I got hooked. And so eventually I started my own cloud-based bookkeeping practice. Well, at first it wasn't cloud-based. It was just me driving around. I would pay the bills for clients. I would help them run their payroll, time cards, that sort of thing. I would reconcile their books, produce the monthly financials. I did a bunch of work for some CPA firms. They would refer me to their clients. And then that was right around when cloud really took off in bookkeeping. And I happened to be in the right place at the right time. I started using Xero very early. Somebody called me up from like a WeWork at Xero and said, "Hey, come get certified. We'll give you a discount." And I said, "Why not? Let's see if there's an alternative here to the the QuickBooks we all know." And I became the second bookkeeper certified on Xero in the US. And they just started sending me all sorts of clients. And I basically built a Xero-based, cloud-based bookkeeping practice, serving clients all over the country, and started hiring remote bookkeepers. And the thing just really took off. 5 years later, a CPA firm came along. I met Bruce Phillips at a conference. He was running a firm called HPC, and he said, "Hey, let's combine forces." So I got acquired. And that firm actually is now part of Aprio. It's Aprio Cloud is sort of that was the evolution of it. So anyway, that's my the brief story of how I got into accounting and what I did with my firm, and that it made me really passionate about technology, entrepreneurship. Right, I got the bug for building businesses and processes, and now I have a podcast, and I get to share what I've learned about accounting and tech with the world. It's the Accounting Podcast. It's a weekly roundup of news in the profession. And I also run Earmark, which is an app that gets you CPE for listening to podcasts like mine and the Modern CPA Show.
So yeah, hopefully you're listening to it on Earmark right now. And Blake, that's such a cool and creative way. I mean, it explains a lot about where you're at and how you got here. I mean, all these years later, there's got to be at least 10 people that are certified in Xero now. Um, I'm kidding. I know we got some people that love Xero, but no, that is quite a different journey. And I think that, like you said, the entrepreneurial part of it is really what took shape. But you having kind of a creative background kind of goes against the grain of just the accounting industry to begin with. And I think that non-traditional route, you not being kind of poisoned by, traditional CPA thinking, like the rest of us have been. It takes a lot to kind of break away from that and think about doing things differently. So it's really cool.
No, exactly. I didn't know what I was supposed to do. I didn't know the traditional way to do it, right? So
Sure.
I didn't have any of those preconceived notions. So that really gave me an advantage.
Yeah, that is a really cool background. Well, and congrats on recently being named one of the top 100 most influential people by accounting today.
Thank you.
I had mentioned, and we'll go through, I had looked and you said, hey, I want to focus on change and leverage. You've got multiple platforms, the podcast, Earmark, and other things. But I'll tell you the kind of different things that you mentioned, I would love to drill into a couple of things. But you said, I want to improve working conditions in public accounting firms, updating accounting education so it aligns with the new career paths, ending our obsession with timesheets and billable hours, increasing diversity in the profession, and modernizing financial reporting to reflect intangible driven economy. Love that you're kind of stating those positions. Let's pick one. We recently talked to Ron Baker about the obsession with timesheets and billable hours. So do you want to tell a little bit about kind of your position on that, what you're thinking about it, and kind of how you think the platforms can help?
Yeah. Well, I never filled out a timesheet before I started an accounting firm. So the idea of tracking time, I mean, I did it. I when I started freelancing, I tracked time. I had a little, what did I use? I think I used FreshBooks, right, to track my time and invoice clients. But what happened is that when I started using all this new tech to do the bookkeeping, I had a choice. I could either charge fewer hours, like half, or I could increase my rate, or I could just switch off of hourly billing entirely, which is what I did. So cloud allowed me to cut the time in half or more. I mean, I would say 80% of the hours that I was billing before got automated. So I fixed the fees for my clients, just switched to a fixed fee model, monthly fee, and they loved it. They preferred it. And, I was able to lower prices and actually make bigger margins. And I think a lot of people in the world of bookkeeping, cloud accounting, CAS work, whatever you call it, have experienced that and see the benefits of it. But for some reason in tax and audit, in other areas of accounting, people are still doing the timesheet thing. And I think that AI is such a productivity booster that it's going to do the same thing in every other area of accounting. And we're going to see it happen really fast where these practices won't be able to charge hourly because they'll either have to increase their rates so much that clients won't stomach it, or they're going to lose billings. So
Sure.
I think that billing by time is something that we do as a profession because we've done it for 100 years. But why do we do it? We do it what? Because some lawyers started doing it back in the 1930s.
Yeah.
They didn't do it before. And I think it's kind of the root of all evil in accounting, actually. I think that timesheets are responsible for they create a culture of inefficiency and resistance to change. And I think that timesheets are actually also responsible for the lack of diversity in our profession. I think that there's a lot that's wrong with the profession that's due to this business model of selling time.
That's a good segue into your other one, which was on the diversity side. I mean,
Yes.
I wasn't expecting that right turn there. Kind of lean into that a little bit. How so?
Sure. So what is the incentive of timesheets? What does filling out a timesheet do to an accountant, to an individual?
I can tell you how we use timesheets.
Sure.
So we don't use timesheets to bill. We don't use timesheets to scope. The only reason why we use timesheets, and I would love to still be able to kind of get away from this, especially as the team gets bigger than 2 people or 5 people, the team gets 50, 100 people. One, it does help to kind of validate pricing whenever we want to, if we have 15 different widgets to turn on, like how are we doing within the widgets? We don't get super critical on it. We don't beat you over the head with it. I'm not ever showing you your utilization. The only metric that we usually go off of is like book of business size. So Blake, can you run $1 million book of business? I give you these resources, period, stop. You figure out your utilization. If you can get it done 30 hours a week,
Yep.
you're great. You know what I mean? Leverage the team. That's how you win the game. The only time whenever I come back to my timesheets is to look at job profitability, so that if you come to me and say, Adam, there's no way I can get to $1 million book of business, I'm struggling. We can look back and we can see where's the time going that you can't get to $1 million book of business, because I can show you 30 people sitting to the right and the left of you that they all can do $1 million book of business. So let's see who's truly the time vampire and what's going on. That and validating our pricing are the only 2 reasons why we do timesheets, and it's all kind of loose at that,
Right.
around the quarter hour, just find time for it in the day kind of thing.
So I think the key there is that you're not using the time data to incentivize your employees because it's based on a book of business, which is a revenue target. The timesheets are informational. But in most firms, that's not the case. In most firms, staff are incentivized, rewarded for the hours they bill. They're expected to bill a certain number of hours because the firm is still billing for time, right? So they want their employees to bill hours. So they incentivize them to bill a minimum number of hours. They reward them if they bill more, and they punish them if their utilization or realization is too low. And so what that does is it creates an incentive to be inefficient. Because why would you go faster when you need as many hours as you can get? And this is exactly what I experienced when I was at a big firm. I was at Armanino in Los Angeles, and we use this system, right? Everybody does. It's very common in big firms. And I saw this, like the staff who I managed had very little interest in using new tech that I gave them, because they knew that it would just mean they're going to get more work, more clients. Right? Sure. Why do something? And there was no benefit to them. Right? The same number of hours. So that's one reason. Like it penalizes efficiency. It penalizes productivity. It reduces the incentive for anyone to do anything faster. If you use it as a performance system. So it's good that you don't, right?
And
it goes beyond that, right? Because in a firm that like rewards inputs and not outputs, I think it actually creates like a diversity problem. It contributes to the problem, because especially when you think about females moving up the ranks in accounting, right? Women. If you incentivize your people to work as many hours as possible, you create a situation in which balancing like family and work is very difficult. So the people who succeed in a firm like that are going to be the ones who dedicate all of their time as much as possible to the firm, right? Bill as many hours, right? And who is that the most difficult for? It's for women who want to have kids. And I experienced this as a dad, right? We had my son when it was like not long after I joined the big firm, right? And so like I could see how like I was incentivized to like stay at the office as long as possible, right? Yeah. And if I was like mom, there's no way that I would be able to both like do my job well and feel like I was like giving enough to my son. So like we acknowledge that there aren't enough women partners in big firms. And then we say, oh, we must do more. And we come up with like initiatives to like encourage them. but we don't actually look at the number one contributor to the problem, which is the business model that encourages our people to work more than they need to in order to advance.
And I'm sure there's also a huge generational part. I can't tell you the number of times I've heard old guys like me saying, these kids today don't want to work the hours that it took to become a partner. Like there's something wrong with the generation. And
I think there's something wrong with your generation.
I agree 100%.
Tom's like, but I'm only 35, dude. What are you talking about?
I just look old, yes. But I agree with you completely, Blake, because as I'm hearing that, I'm like, if what you're hearing is the majority of these people are saying that, you're not going to change that generation to suddenly find all the people that want to work just like you did. You're seeing something new. And to your point where you're saying, well, then to get promoted means working all these ungodly hours, they're just going to find that people are saying, nope, I don't have interest in doing that.
I was kidding. I do believe in the value of hard work and effort, and I work a lot, right? Mm-hmm. But I do think that like I think part of the problem, Tom, is that like the Gen Xers did not have social media, and millennials and Gen Z, when we're sitting in our cubicles, what are we looking at? We're looking at like our friends on Instagram taking trips to like Thailand, right?
Sure.
And here we are, sitting in an office doing accounting work, right? That's the problem. I really feel like it's because we are so aware now.
I think you're right.
All the other things we could be doing with our lives. It's really hard to like sit there and grind.
Yeah, but they get a free lunch on Saturday, right? When they're doing the tax work compared to Thailand.
Yeah, we see those. Yeah, I mean, I think the biggest thing is like whenever we would tell people that it was more like, it was more based off of your book of business, the first thing people go, oh, I get it. The more hours I work and the harder I work, the more money I make, because we also tie our incentive comp to it. And I'm like, no, if you think that's the game, you're going to lose. Because I can tell you right now, if you're going to be the hardest working person, one, you get no awards here for, showing me how many hours you work. In fact, it's going to be the opposite. If I see you're working too much, I'm going to be going, hey, what's wrong? What's going on? But it's kind of the opposite way. It's a leverage game. And so whether that's technology or team, your job is to push as much work down, create the traps so you can review things and be more value added to your clients and stretch your reach. So that's kind of what we promote and kind of preach. So at first, though, there is that education process where people are like, hey, I don't have enough hours to get to $1 million. And I'm like, now you get it. Like, that's the whole point. You shouldn't be. You should be building out the team and leveraging technology, incentivizing those kind of things. I mean, we have, to your point, we have team members that have never really booked 40 hours a week, but get paid well above average par for their pay band, just because they've figured out how to, one, we have annuitized work, which makes it nice, but they've also been able to build great relationships with their clients. And as you know, in this space, the longer you have your client, the easier the work gets, because you can answer things, and, onboarding clients is the most difficult thing that we do. And these people have had clients for 4, 5, 6, 8, 10 years, and they can just kind of, everything's on cruise control for the most part.
Yeah.
Yep.
Yeah. And I've told, sorry to interrupt you. Adam knows this. I've told a number of people when we talk about kind of high hours, and I'm above that minimum book that they're looking for. If I could get the work done in 30, 35 hours, I think rather than getting penalized by Adam and Jody, they'd be saying, hey, how are you doing that? And can you teach other people to do that? Because we love that if you've got happy clients and you're delivering good service and you can manage the time within that, wonderful. I don't think it would be a case of, oh, we need to add 25% to your workload so that you're doing the same hours as other people.
I had this one guy, he came to me, he was like, man, I should be mad about this, but it's kind of smart. He's like, I have this one employee every year, he's really good. So instead of giving him a 5 or 10% raise every year, he always comes to me and says, hey, how about, I did the math, how about instead of you giving me my 10% raise this year, you knock 3 hours off my work week? And he's like, and I did it the first year. He goes, then he came back the second year and he did it again. And he goes, he's down to about 34 hours a week. He goes, I'm afraid eventually he's going to just kind of, I go, well, at some point it's probably got to stop, but I go, that's pretty smart. So like in ours, whenever we do book a business like that, we can also tell people the nice thing is, if they want to make 1.5 times what their pay band is worth, Yeah, they
Yeah.
can probably put in a little bit of extra time and leverage more. I mean, there's a certain limit to where you can't manage any more relationships. But you can downshift the other way. So we've had many people that say, "Hey, I want to work part time." We had one gal that she went part time whenever she had her baby, and she ended up making about 80% of her salary working 50% of the time because she'd
Yeah.
already had her clients really dialed in.
Yep.
And so it gives the people also to your point, like whenever they're flipping through and seeing everybody taking all these cool vacations and stuff, it does give them the ability, if they are looking for a little bit more downtime, to say, okay, well, maybe I don't need to have the BMW and live in that place. I can downshift a little bit, Like Tom, I still live in my mom's basement and I can afford to put money away in the savings.
100%.
What I love about what you're doing is that you have aligned the firm goal, the firm's like top line revenue goal, with how you're incentivizing your team. You are incentivizing them to manage a book of business based on revenue, and that's what the firm is looking to do. And that's the problem with the hourly model at this point, is firms are trying to move to fixed fees. They're trying to move to like a revenue goal for the firm, but they're still incentivizing everyone to bill hours. Like there's a mismatch here.
You're right. Yeah, that is the hard work to go through and do that. But you're right. And just to add one more point to that, we do variable compensation. So if you're above that minimum book, and Adam mentioned $1 million, so it's around there for a CFO, you get 8% of what the revenue is. So what happened 6 or 7 years ago is when they would come to me and say, Tom, can you take on a new client? Just like everyone else, I feel really busy. And so it's sort of this, man, I am having a hard time doing that. Well, now I get incented for doing it. So there's a little bit of tension, which is good. I can make more money. It's an actual choice. And do I want? And so you hear people asking for more. They want that kind of work, and then that helps the firm. So it's a great incentive.
Yeah, we've been pretty fortunate from there. So I know one of your other big things is you wanted to kind of talk about AI and tech. Interested to kind of hear, what your thoughts are around that.
Oh, I'm really excited about this year in AI, because I don't know, what's it been, like three years now that we've kind of had these like chatbots.
Yep.
And we've been enjoying them, using them for a lot of different things, mostly like writing emails and proposals and, the communications kind of stuff. Not a lot of actually using it in accounting. But this is going to be the breakout year for AI in accounting. And it's because of these agents, agents that can now reliably do work. And why is that? Why did we suddenly have this shift where now we've got tools like Claude Cowork, there's Tax GPT, there's Basis, there's all these AI agent companies and tools out there. And it's because they have cracked the code on how to take a probabilistic outcome and make it deterministic. What do I mean by that? Well, anyone who's used a chatbot to try to do something in accounting knows there's like a chance of success when you give it a prompt. You say make this, amortization spreadsheet, right? There's a certain probability that it will get it right, and there's like a success rate when it comes to like building that thing. Maybe it gets it 80%, 90% there. But the problem is that when you look at it, you have to figure out what it didn't do right and fix it. And sometimes that takes just as long as doing it yourself, or maybe more time. So that's been one of the problems with using these tools. They're not 100%. And in accounting, we can't do 90%, 80%, 90%. Right? It has to be near 100% for most of our purposes. Because if we're not near 100%, then we can't, it's going to be material, right? We're going to have material errors in our financials.
Right.
So that's why we haven't been able to use these tools. But the new agents that are coming out, these like AI agent tools like Claude Cowork, great one to try. What they do is they create like a workflow structure for the AI that allows you to get to 100% accuracy on tasks. So it does that by taking your prompt, your request, and turning it into a checklist of measurable outcomes that are like, yes, no, I completed this or I didn't. I did this or I didn't. I did this or I didn't. And so it's taking that, and instead of trying to do it all at once, it breaks it down into a series of tasks, and then it can tell reliably if it completed the tasks or not. And you can interrupt it and tell it what to do differently with different tasks, and it will run in parallel. So you're not like just stuck trying to go sequentially through all this stuff. And so now we're seeing, AI agents able to complete a 1040 tax return. That's happening insane. Right now.
Yeah, I know.
Basis says they've got one that does a 1065 end to end.
I've seen the demo. It'll be what they have on the roadmap on the next quarter or two is looking pretty exciting. The ability to actually put it into the return and do all that kind of stuff. It sounds like the one you're most hyped on right now is Cloud though, or is Cloud.
So Claude. Anthropic is like the number 2 to OpenAI, and their chatbot's called Claude.
Yeah,
CLAUDE. And
my chat GPT told me it's not as good as it, but it said it's a close number 2 as well. Yeah.
So it hasn't been for a while, but they just came out with this desktop app. It's on Mac. I don't know if it's on PC yet. That has a tool called Cowork, and this is the one where it takes your prompt, and instead of just trying to complete it, it asks you questions, clarifying questions, creates a checklist of subtasks in order to achieve the outcome you're looking for, and then works through those tasks. And it just increases the reliability and accuracy of the output dramatically. So that's the one that I've been playing around with. And essentially, I think that all of the tech that is coming out right now is basically built on that. It's either built directly on Claude Cowork, which they can access through the API, or it's a similar approach. We see that with like Puzzle, the AI general ledger. They are building AI agents into Puzzle that follow this process. And you can reuse your prompt every month when you close the books. And so it can do stuff like reconcile a bank account. Mm-hmm. It can do stuff like you take a PDF for a bank account that doesn't have a bank feed, and it can extract all the transactions and enter them into the general ledger and then compare that to the beginning and ending balance. It can do depreciation schedules. It can go and like look through your GL and find all the transactions over X dollar amount that could be purchases of like computer hardware, and then add them to the fixed assets module and create the depreciation schedules. I mean, this is stuff that staff accountants do now on a regular basis. And basically very soon, all of it is going to be done by AI agents.
And we've seen like in Basis where when it presents the results, it can categorize it in I'm very confident in these things. And so you might think, I've seen this vendor before. You've always put it here. It's the same date. Medium confident, I need your help. So you could get yourself to a place of saying, I can do maybe a quick review of certain ones, and then other ones where it's asking you for that help. That is really helpful. And then learn from when I take the ones it wasn't sure about and tell it what to do.
You know what still kind of irritates me? Well, I should say it definitely irritates me. Because I'm trying to solve for this now. So maybe you know how to solve for this. But it used to be 15 years ago, whenever we started using bots instead of agents, there's this concept of middle 60. A client of ours like introduced it to us, where she's like, where AI is right now is it can take care of the middle 60. Where it still struggles is the first 20 and the last 20. Like it hasn't figured out how to do those yet. And the frustrating thing, whenever she said that, I was like, yeah, you're so right. Like where we're trying to find where we're spending our most time at is that whenever we have these tools and we're using them, I'm going back to some of the software vendors and I'm saying, hey, the team's actually saying they're spending more time than less time. You know, I know that's like training a person. So eventually some of that stuff will work itself out. But like bots 15 years ago, we were able to they were able to handle the first 20%. They could go into the bank accounts and grab the bank information and bring it in. And now like these agents can't do any of that. And whenever I bring it to some of the AI people, they're like, well, technically we can, but we don't. And the reason why we don't is because you'll be mad at us because in 3 days it'll all break again because security has gotten so much tighter that the banks are constantly changing all their algorithms and stuff, and it's messing up. Like eventually, hopefully the agents will be able to learn fast enough to like fix that stuff. But right now I'm spending an exorbitant amount of time on like admin tasks rather than accounting tasks. So I've traded the accounting tasks where I was using offshore before, they could do the admin task and do the accounting. Now I still need somebody to do the admin tasks, and now the computer can do the accounting tasks, but then I still need somebody to double check it. Does that make sense? Like I'm still kind of bookend around people right now.
Well, I mean, that might change really soon. I don't know what tools you're looking at, but like Cowork it integrates with your Chrome browser. So it can open up tabs in Chrome and log into sites and download files and extract information and pull that into local folders and work with it.
Sweet.
So, and we're also seeing, and I haven't played around with these ones, but AI agents that just live on the desktop and can click around the computer. So Perplexity Computer can be installed on a Mac Mini, and it can just sit in your office, and it's an AI agent that just has its own desktop. Right? You can email it, and it will go check its email like a human, right, every now and then, and like work, like try to do work and respond to you and that sort of thing. It's new, so it may or may not work so good, but like it exists. There's OpenClaw, that's another one. So once these agents get more reliable clicking around in traditional interfaces and using web browsers and stuff, I mean, I really think that like a lot of that staff work is going to be done by like, instead of having like a cubicle farm of like 10 staff or whatever in an accounting firm, you're going to have a stack of 10 Mac Minis on your desk. And it's not going to eliminate all of that work, but I think that you could probably cut a team in half, right? You could have instead of like a 10-to-1 partner to staff ratio, right? It could be 10-to-5, or maybe even 3 people doing the work of 10.
Who do you think's the most? I mean, it seems like there for a while the big shift was going towards offshore, and I feel like the first wave that's going to get hit now. Naturally, you're talking about like the number of accountants slimming down, but it feels like the first wave that's going to get hit is probably a lot of these offshore teams. Or, I mean, unless you have the ability, I guess, to shift the offshore team to more of the accountants, I suppose.
Yeah, I guess it depends what you're using the offshore team for. Right. If you're sort of more traditional and you're just using that offshore team to like do processing work, then like you could probably save money using AI agents. Although the thing is, you're already getting such a discount offshore, right? You're like a third the cost of a U.S. team. Like how much more cheap does it need to get? Right.
Exactly.
Let's put it this way. If you want to grow a firm, right? If you want to make a lot of money owning a firm or as a partner, are you going to be better off cutting expenses or growing revenue? And the answer is always revenue,
always,
right? Always, right? You just do the math. You can do the napkin math, right? And you could say like, okay, yeah. So I think where it's going to really make a difference at the beginning is really small firms, which is exactly the experience that I had with cloud. It was the solo operators who adopted this tech that benefited the most. So we're going to see the rise of one person fractional CFO firms. And as one person, you can set up these agents to automate the accounting for your clients and then provide the advisory service on top of it without having to build a team. And that to me is the dream, because anyone who's built a firm knows that going from 1 to 10 people is the most painful part of building an accounting firm, because when you are one person, the only person you got to manage is yourself. As soon as you hire an employee, you've got to manage them. And when you're small, under 10 people, you have no redundancy. So it all falls on you as the owner. If something goes wrong or you have an employee leaves or whatever, right? And until you get to say 10 or more, where you have redundancy, you're always working. Like and we can see this in charts of firms, right? Like revenue goes like this with firm size. Until you get to 10, you actually are making less money than you made on your own in most cases.
Oh yeah, so, I experienced that for many years, for sure.
But imagine now if you could do the work of 10 people with just one human. Now that firm becomes really lucrative. And I think it slots really well into what you guys do, into your model, right? Because you're talking book of business, right?
Mm-hmm.
And so you can basically do the same book of business. Now, maybe it's not 1 to 10, right? Maybe we don't get 90% cost reduction, but we can certainly cut it in half, I think, in a few years. And that's incredible, right? Because what's COGS or cost of labor in an accounting firm, right? 40, 50, 60%.
Yeah, at least, 50%.
So imagine, let's say really conservative, it's 40%, right? So let's cut that in half. That's adding 20% to the 20% of your costs going out of profit.
Yeah.
Or sorry, half of your labor costs going out of profit, which is 20% of your revenue, which basically doubles your profit.
Right. Yeah, no, it's huge.
Yeah, from what you had said earlier, Blake, though, the way you'd really want to look at it is you could probably double your revenue with the existing team or with very small growth, right?
Exactly.
That's the real money to do that, is I can keep growing.
And that's a better way to put it, right? Because it's not like we're actually going to cut headcount in most firms. Like every firm already doesn't have enough people. So it's about we will cut headcount because if the people who are just doing the routine tasks, like processing documents, don't upskill themselves, then they're going to be competing against, an AI agent that can do the job for 100 times less. So
I am curious your thoughts on this, because for years we always heard the accounting, it's such a people shortage. Nobody has enough people, blah, blah, blah. There's all these older people retiring. But I have seen in recent, and I know they're trying to lower some of the barriers to be a CPA and those kind of things. But I have seen that the accounting profession for college graduates is one of the top degrees that everybody's going after now. Do you think there's going to be this inflection point where the industry's whoa, no, we got it covered from an AI perspective, and there's just this flood of people trying to get into the space that really don't have the experience or wisdom to do more of the advisory work?
Well, we're starting to see that in general, college grads are struggling to get jobs right now, white collar jobs. Entry-level jobs are hard to find, and it's because companies are figuring out how to automate those jobs first. And the Big Four are doing it, right? PwC cut 5,600 jobs recently, and their US CEO said, basically, if you're a partner and you're not using AI, you need to get out. And they are going to start building services that require no humans to deliver. I don't think that it's actually the right model for professional services firm, right? To eliminate the people. I think it's kind of the value. That's kind of the core value of what you do.
Yeah,
but
absolutely.
Let's set that aside. The Big Four have the biggest incentive to do this because the labor cost is really high. They already have a lot of leverage in their it's 1 to 17 on average or something like that. If they can cut that, the partner profits are just going to go crazy. And we all know that the Big Four, all they care about is money, right? So they're going to do it. And the problem is that's where all the college grads go, right? That's like 2/3 of accounting grads go into Big Four.
Yep.
So where are they going to go if those jobs are automated with AI? Who's going to train them? The small firms don't have the capacity to train or the will to do it. They expect we expect the Big Four to do it. The universities are not, I don't think, capable of doing this. Where do you get the real world experience, right? And you're not going to get it grinding away anymore in Big Four. So that's going to be a big problem.
Speaking of technology, I think one of my biggest concerns, we've always had shiny object syndrome. And then as the team's gotten bigger, I've had to calm it down. Whenever there was only a couple of us, I just next day, new tool, constantly. Now, one of the things, whenever I'm talking to somebody, for instance, even basis, first question out of my mouth always before you even tell me what kind of cool stuff you do is I'm like, how much money do you have? Because one of my concerns is I'm going to shape my delivery and my team around this product. And if it evaporates, then, Claude, chat, those kind of things, obviously those are big institutional pieces. So you don't have to worry too much about using those kind of things. But you even I actually saw your comment. I thought it was pretty bold, by the way, Blake, on our friends at the bookkeeper. That thing just kind of imploded overnight, and we've never used it because I always knew it was kind of half human, half tech, and I was always just like kind of confused by it. And I was always like, I'm going to just use ClickUp and build my own. Like the only thing that they really had to me was a cool user interface. And I was like, well, I can do that myself with my own team and I'm good. But we saw that with them. And I saw your comment on there where you're just like, hey, this was just straight up.
It was fake AI, right?
Fake AI. So how do we avoid that? Like if you've got a $1 million practice or a $5 million practice or whatever, and you're trying to make this, and there's so much investment going into this space, how do you, what's your tips for just kind of making sure it's legit?
Yeah. This is a big problem, right? Shiny object syndrome is a problem, especially in small firms, right? We're always trying the new tech and then it doesn't work out. We got to swap it out. I learned that lesson. Like, don't put in something into your practice that you're going to have to swap out later. It's so painful. So honestly, yes, the answer is like to experiment now so that you know what is available and possible, but like don't deploy at scale yet, generally, until you find something that you're really confident in. So yeah, I agree with you. Funding is important. Look at how much money they've got, who's backing them. Although in the case of Bookkeeper, they had some really great investors.
That's what scared me a little bit, is they had a lot. Yeah.
So the other thing you got to do is you actually have to like investigate the tech. Don't just take the promises at face value. Ask to see how it really works. And that was the thing, is that like if you actually looked at Bookkeeper and asked for a demo behind the scenes, it's pretty clear that there was not some advanced AI or any AI happening, because it wasn't happening in real time. It was people behind the scenes doing the work. And that's why it would take so long for any of this automatic work to happen. And so people just didn't ask questions. They didn't ask how it works. And that's what we did on our podcast, is we asked how it works. And then it was kind of clear that it wasn't really anything. It was just
interesting
humans pretending to be bots, basically. Which, by the way, is like how a lot of tech companies faked it.
Yeah.
Over the last
100%.
many
That's
years,
what I'm
right?
saying. Like, yeah, it's just,
They call it the mechanical Turk, right? You think it's like a machine, but it's just a human inside the box making all the things work.
And some were transparent about it, right? I mean, Netflix, when they first talked about streaming, I mean, they showed racks of VCRs. When people would ask for something, they would put in a tape and say, okay, there's Adam's playing, and sort of, is this proof of concept going to work? Because someday it'll be computers.
Yep.
But in that case, they weren't claiming that it was something different. They were sort of testing out the demand theory.
Fun story like that. Amazon same day delivery. When it started, it was, they would just call like Uber drivers to the warehouse and send out the packages via Uber.
Okay.
To the customers. That's how they tested it out to see if it would work. And then once they validated there was demand for this, then they created their own like app for delivery drivers.
And now I can't wait more than 2 days for anything in my life. Yeah, it's.
I mean, I am so spoiled. I live in the Phoenix area, and like we're like a dream for a delivery company, right? And we literally have an Amazon truck in our neighborhood, like at all times. Like if one leaves, another one comes, right? And it's just you can get a 4-hour delivery here. It's nuts.
That is crazy.
Yeah. Once you get used to that, it's you see something that you go to a traditional website and it says it'll be there in 2 to 4 weeks. You're like, I'm out.
I forget about stuff that I order now. If I order it on anything other than Amazon, it's basically
100%.
Christmas every day at my place. So
yes, unfortunately.
And DoorDash. Don't get into DoorDash. DoorDash is a money pit. You will get addicted
fortunately,
to it.
I haven't done that yet, but you can imagine once you're on the machine.
Actually, that would be a good busy season perk for an accounting firm. Is just give everyone a DoorDash account and let them order all the food they want to the office.
Yeah, we do that for our remote team for sure. Because because the firm's great about giving all these lunches and dinners during tax time and all this other kind of stuff, and the remote team's like, I don't see any. So so we definitely do that. But hey, Tom, I know that normally you like to wrap it up with like a question, and we do the rapid fire sometimes. But I feel like you took it a little easy last time on Ron Baker. So let me take Blake here.
Okay.
Yeah,
I love it.
I think this way we can really unearth the real Blake here.
Okay.
So, okay.
I just before you do this, I just want to say, like, for anyone who's like really feel like I don't mean to insult your big four firm. Like when I said that all they care about is money, I was joking. So please don't. If you want to email me, BlakeOliver.com.
Well, you mean their private equity investors do? Yes.
Yeah, exactly. There we go.
I get
We
it.
can all agree that private equity has no soul, right? We can all agree that. So.
Yeah, I mean, it has a business purpose for sure. So, but yeah, the people are great, but yeah, it's the ultimately who you have to adhere to that you gotta figure that out. But yeah, no, don't worry about that. I think you're covered. I think the sentiment is shared amongst most. So, all right. So, are you ready?
I hope so.
Okay. So Blake, is it creek or crick?
Creek.
Advisor or consultant?
Advisor.
Are you a cat or dog person?
Dog.
AI in accounting, excited, skeptical, or scared?
Excited.
Early bird or night owl?
Night owl.
Value-based, fixed fee, or subscription?
Subscription.
Coffee or tea?
Coffee. I'm out of it. I need more.
Specialist niche or broad service firm?
I had a broad service firm, but I love like if I did it again, I would specialize. But yeah, I had one that was just services. This is not a short answer, but we niched based on the services we offered, if that makes sense.
Yeah.
Like you could only get like these three things from us. Yeah.
Sure.
Yeah, 100%. I even think that geographic stuff can be in there too. So, yep, I'm with you. So, work from home or office?
Oh, home.
Okay. And then best growth lever, pricing, people, or process?
Oh, it's like that's the three. The three all need to go together, but if you have to choose one,
What's the number one?
If you can only pick one, it's going to be people.
Yep. Okay. Well, cool. See, like Tom, that's where you can really get. I mean, he kind of said it all. Like he had me whenever he said dog. So then I was like, okay, Blake and I can be friends. We can share a beer. But yeah, so no, I appreciate that. Blake.
That's great. He could have said scared of AI, hours-based billing, and something else. You're like, you're a dog
still
person.
would have had a good time.
Exactly.
Submit your timesheet.
Yes.
Yeah, that's right.
So Blake, you mentioned your email address, but I think we talked over. How can people get hold of you if they want to learn more?
Go to BlakeOliver.com. I have a book that I wrote called How to Build a Sustainable Firm.
Yep.
You can get that at BlakeOliver.com/book. If you want to earn free continuing professional education for listening to podcasts, go to earmark.app or get the free app from the App Store. That's my baby, my startup.
Yep.
Free CPE for podcasts, one free per week, no charge. That's growing like leaps and bounds, and it's a lot of fun. We use a ton of AI to like create all these courses. It's really been exciting.
Yeah, it's a brilliant idea. Feels like a almost brilliant idea, but definitely a brilliant. Like why did nobody think about this before? So yeah, Earmark is awesome.
Yeah.
Well, somebody did. I'm not going to be like I didn't. I wasn't the one who came up with it, but
not the same. Not to the same way that you've done it. You know what I mean? I just feel like your spin on it's just different. Yeah. So
thanks.
Because I haven't really been engaged with any of the other ones until yours. So
it's amazing to me how difficult it actually is to build a good app. Like I have so much more empathy for developers now that I'm building my own, because just seemingly simple things that we ask for all the time as customers, as accountants, are really hard to build. So if there's like a company you're working with that's like rapid releasing features and you're loving it, like that's rare, stick with them. That's another way to know if it's a good company. So
yeah, that's a great idea.
My plug for Basis then. Yeah, so far they've been pretty awesome.
Sweet.
Yeah. Blake,
this has been wonderful.
Yeah, we covered a lot of ground. I really appreciate your thinking and really enjoyed the conversation. Thanks so much for spending time with us today.
Thank you both. Thanks, Tom. Thanks, Adam. This has been a lot of fun.
Thanks.